So gonna be doing a quick a quick outlook over what happened on Friday and the main lessons that we can learn of that. So this was the Friday's trade that I took, and I was taken really early before even the real move did happen. At this point in time, I'd been wicked out. Then you can see how the market did expand. As I said in the previous video, is this one to me was a good loss because everything that I'd wanted to see had already printed out. My plan had shown up. I had executed maybe kind of early, but also I had followed my plan. Sorry, and then what happened is the market did its thing. So what did I see before? So if I can take you to the weekly time frame, I started it off the weekly time frame, knowing that it was on Friday. My network. All right, where are we? All right, here we go. So this was what I'd seen from the weekly time frame, and at that moment in time, by Friday, we had already swept the previous week's high, which to me, after sweeping that major liquidity pool, what I was kind of expecting, not really that high push, but maybe consolidate as the candle will be closing as of Friday. So I had determined this, and I already sent, because I sent the video and also via my Telegram. If you're not there, kindly join so that we may get to learn together as we trade. So it's train and trade, and also to attain what you want to attain as a community. So as of Friday, we had already swept the major liquidity pool, and to me, of the weekly, I was expecting ranging conditions, but of the daily time frame, that kind of nullified my not really nullified, but because we had a liquidity pool that was also a major one, and we had seen a price rejecting of this major liquidity pool, also the context area, which was the daily fair value gap. You can see that daily fair value gap had been traded into, and you can see also we had swept that PDL, which happens to be the previous day's low. And I'd seen that we had this liquidity pool at this point in time, which was to me a major liquidity pool. And as the market was rejecting, I thought it wise to target those liquidities. So my internet is kind of stubborn, right? Let me check on here again. There we go. All right, that's good. So because I'd seen a price rejecting off the context area, and we had that major liquidity pool, so with these, you see, like, things are aligning of the context area, and we have a liquidity pool which I think was relative equal Asia highs, but also before the London relative equal London highs that were left open cleanly. And also we had kind of the New York previous day New York session highs, which is also a major liquidity pool. So that was what I was trying to target at this point in time. So I drop out to the 4-hour time frame. So knowing that prices at the context area, knowing that we have a liquidity pool higher, so what was remaining for me was maybe to execute. And my execution was to be based off this is the context area. You can see the daily fair value gap, as well as the PDL that we have already swept. Then price rejected, you can see that nice rejection, and then I traded this candle. This was the candle that I did have my entry. I don't know whether it's too sunny. All right, this is the candle that I traded. Was expecting higher prices of that, but with my stops, you can see SL trade. I will be talking about how I trade my stop losses, and then this next candle took me out, and you can see it did expand, but we had that nice rejection. What we want to see from the 4-hour time frame is price rejecting of the context area, is price giving us signatures of the context area, because we have already predetermined this is the target, as well as we have these other relative equal London highs that were left open. So since we have predetermined that, what is the 4 hour trying to align with this idea. So to me, with that nice rejection, with also you can see we didn't form any fair value gaps dropping lower. So to me, I had that yes, indeed, price to me is giving us a more bullish argument compared to bearish arguments. So my network again. All right. So what the 4 hour was clearly aligning with what I want to see. We had that nice rejection of that context area, and therefore what I needed to do is to drop onto the 1 hour time frame, where I did base the entry off. So of the 1 hour, what I did is basically we saw a change in state of delivery, whereby this candle, this bullish candle around when 5 a.m. had closed above this context, this bearish down close candle, which to me I usually refer to that as a change in state of delivery. So after identifying we have a bullish change in state of delivery, then as the market was pushing higher, I needed to drop onto the 15 minutes time frame. And where did I take the trade? So immediately this candle was printing going higher, the 6 a.m. candle. That's where I did have my trade position, and then we had lots of wicking of the 1 hour time frame. And remember, this is where I had my stop losses. These are the point I had my stop loss at below this low that had already been swept. So as the market did expand with this 9 a.m. candle going higher, then I did move my stops to that point in time. Then I added another position, because now we have now clearly created that change in state of delivery. We have already maybe closed, we have confirmed fully the change in state of delivery. We are having a bullish momentum. If we go to the 15 minutes time frame, what you can see is we were having a nice bullish momentum. After this consolidation, the market pushed higher above these down close candles, forming another fair value gap. So immediately this 15 minutes fair value gap around this point in time had been confirmed. I entered another position with my stops at around that point in time. But what happened? The market rallied lower. My trade was triggered, but my both trade SLs were then triggered. And how could I have avoided these? All right, where should I have had my stops? But to me, why is it a good loss? Because from my backtested data is whenever the market has already swept these lows, you can see they had already been swept around this point, then I usually place my stops at around this point. And 80% of the time that they are not really triggered. So I really wouldn't say I should have placed my SL below here, but what you can see, market dropped. So something maybe I could say of this trade is maybe the market rallied deep into a discount, then a buying of a discount. So if we have that, so you can see that the market dropped deep into the discount, the OTE levels, and then the market expanded higher. So maybe that's what I can get off these lows. Those are good lows, but I should have maybe watched the OTE levels, see with the rejections and how the market was reacting. Then maybe because I usually have two trades per day, no exceeding 2, so I wouldn't really had any trade since it was also Friday. You can see the market pushed higher, and then maybe my first trade could have been hit if the market didn't sweep my liquidities. My TP was around where the market stopped, but my first trade was kind of higher. But that's what happened, and yes, we learned from it. So that's what happened, and basically to me was a good loss, and we keep on moving. So we move on to the next. So until next time, I want us to do a weekly review, and then we see what happened. All right.